Good morning and welcome to the Findi Limited full year FY23 results and FY24 guidance webinar for the period ending 31 March 2023. Presenting today is Non-Executive Chairman Nicholas Smedley. Today's format will have the team run through the results presentation followed by a Q&A session whereby investors can submit questions by the function on the bottom of the screen. I'll now pass to Nick.
Thank you very much. As stated, my name is Nicholas Smedley and Chairman of Findi Limited. I, with great pleasure, will take you through the 2023 financial results as well as our 24 guidance. Before I do so, I think it's always important just to give a couple of stats on the size and scale of the operations that we actually have now in India. By way of measure, 1.5 trillion Indian rupees processed across all of our ATMs and digital payments platforms. To put that into perspective, that's a little over 5% of all cash in India goes through our machines. We do more than 1 billion transactions in a year period. That's more than 3 million people every day touching one of our machines or digital payments platforms, or the equivalent of every 9 days, the entire state of Victoria's population using one of our machines or touching one of our payments platforms. We are now across more than 20 states, and on the completion of the CBI rollout in the coming months, we will be in every state in India. So we'll be a true national payments company. We have more than 20 financial institutions that we partner with and provide services to. Some of these are very well known to everyone, but banks like State Bank of India, Central Bank of India, Punjab National Bank, and so on. We have a growing team based across 4 regional offices, 1 head office across India with more than 500 staff delivering the services of both Findi Pay and our Findi ATM businesses. We manage more than 20,000. We now own more than 8,000 of our own ATMs across India. And we have more than 10,000 Findi Pay merchants currently being connected with our digital payments platform. And that number is growing by the hundreds every month. Findi at the moment has a market capitalization of approximately $17 million. Share price as at the 22nd of May was 46 cents, with shares on issue of 36.5 million shares. From our placement some 18 months ago, we have about 21 million trading options still trading with a strike price of 90 cents. They mature in January of 2024. Board and management own 25% of approximately 25% of the business, which is a great alignment of both senior management, board, and shareholders. One of the stats that we have on here, which I always find perplexing at the moment, as at 31 March and as at current May 22 market cap rate, we had more cash on the balance sheet than our current market cap. So a very well capitalized organization. We have also some fantastic members on the board. We have Simon Vitullo, Non-Executive Director, Jason Titman, Non-Executive Director, that bring a plethora of experience in financial services, technology, and restructuring and software industry. And then we have a fantastic executive team on the ground, which is led by our CEO and Managing Director, Monish Kumar. He has more than 30 years of banking and finance and marketing experience, and was a very senior Citibank banker before he joined Findi. And Deepak Verma is our Executive Director and CFO, who does a fantastic job managing the finance team. And you'll see the outperformance that we have been able to deliver has been greatly helped by the efforts of Monish and Deepak's team. Over the past 12 months, there's been 2 placements, which has enabled us to have the capital on balance sheet to qualify for white label application, which we have done. And that $5.1 million raised was done at no discount and directors subscribed for more than 750,000 of that. So strong belief and strong alignment with directors and shareholders. So now to the FY23 results as at 31 March 23. Revenue was delivered of 54.5 million Australian dollars. This is up 34.4% on last year's full year trading of the business, which is a fantastic result. EBITDA was delivered of 16.8 million. This is obviously after all head office costs and associations, which is up almost 130% on the prior year. Most importantly as well, the business is in the black. We delivered a net profit of $2.438 million, which was a significant improvement on the modest $2.6 million loss of FY22. Also had operating cash flow for the year of positive 4.67 million. I'll now take you through our earnings guidance, where what we expect to deliver for the FY24 financial year. Now, this is on the back of our Central Bank of India contract now having more than 2,000 ATMs delivered. I can now also happily state that all CBI bank locations for new ATMs have been approved. So the final few hundred ATMs are currently being deployed and should be all operational and earning money for us in this half of the current financial year. We're expecting to deliver for the forecast year at $67 million in revenue, which is approximately 23% up year on year. EBITDA, we are expecting to deliver approximately 23.6 million for the year, approximately 40% up year on year. Net profit, we're expecting to be 3.99 million, up 64.2% year on year. And most importantly is the continual cash that this business is now spinning off. Operating cash flow for the forecast year is expecting to be just under $20 million at 19.67 million, or more than our current market cap, and an increase of 321% year on year. As part of the announcement to the ASX yesterday, we also put out a dividend policy. Our target for up to 30% of after-tax earnings before significant items to be our dividend threshold. This takes into consideration cash required for strategic initiatives and capital expenditure over the next 12 months. So let me just tease that out a little bit. We have released a dividend policy. We do have mechanisms for cash to come back from India. There will be cash coming back from India this year from the Indian entity to the Australian limited entity. However, as we state with management, if there is better investment opportunities, whether they be new contracts, the expansion of existing contracts, i.e. the additional 600 plus ATMs that we have the opportunity with CBI, or an expansion of the SBI contract or new contracts, full stop, capital may be redeployed or redirected for rollout of additional ATMs or inorganic opportunities. We are actively looking as a business for ways to continue to grow the India operations. We are the largest operator in the Indian market for ATMs and payment solutions as it stands at the moment, but it is still a highly fragmented market. And we want ourselves to be the consolidator is the Indian market of this opportunity. So if inorganic opportunities present themselves, rather than pay dividends, we may reinvest that significant free cash flow in EPS accretive acquisitions, or EPS accretive deployment of new contracts won. As briefly mentioned, one of the key pillars and the reason why we have such confidence now in forecasting a long way out for the FY24 year is we know ATM volumes, we know our deployed fleet, we know our transaction volumes on our digital payments platform. And this is largely underpinned by two significant contracts, one being Central Bank of India, which I'll chat about shortly, the other being State Bank of India versus currently the Central Bank of India. The CBI rollout, as mentioned, is now past 200,000 ATMs. We have 2,550 ATMs, to deploy on that contract. The final few hundred of those ATMs have now been approved for their locations, and we'll have the full rollout completed by the end of this current half of FY24. Transaction trends continue. ATMs in place for more than 90 days are delivering significantly more than forecast of transactions per day, in excess of 100 plus, and all of our original forecasting is based off 75 transactions per day. The CBI contract remains on course on a full year basis to be contributing between $25 and $30 million for us annually, and EBITDA of 11 to 13 million. And the other benefit that we also have on the CBI contract, and why the additional 600 plus ATMs, if we can be awarded those, would be very beneficial, is minimum monthly guaranteed revenues. So as long as an ATM is in place and operational, we get minimum revenues despite transaction volumes. So our operational rollout is completely covered from day one. So every new ATM deployment is cash flow positive from day one. The State Bank of India, as we announced earlier last year, issued an extension of contract until the end of calendar year 2023. Findi is well positioned to retain this contract beyond 2023. And as we stand here now in May, the contract has not been put up for retender. So it is management's and the board's view that it is now nigh on impossible for this contract to be retendered this year. So therefore, there will be another extension. We expect this contract at similar or more favourable terms to continue well beyond the 31 December 23 current expiry date. So our current forecast that we have presented for the FY24 includes the State Bank of India for the full 12 months. So that's 1 quarter past the current expiry date, as said, because the management team and board fully expect almost a perpetual continuation of this contract in the near term. Just some key highlights to close out. As mentioned, Findi is operating in a very robust market. Cash is king in India. There's 32 trillion of Indian rupees in circulation. E-commerce, for instance, 80% of all transactions are actually completed via cash. So it's not completed with a debit card online, it's cash on delivery. We have fantastic contracts that underpin our forecasts that are long-term. We have tenures in excess of 5 years on those contracts. We recently achieved a brand new contract with Central Bank of India with a 5-year agreement with 2-year extensions already in there. And the rollout is on schedule, and most importantly, transaction volumes are ahead of forecast. We delivered 16.8 million EBITDA in FY23, and we delivered revenues of 54.5 million in FY23. We had strong cash generation for last year, despite significant investments. But we are forecast to do 19.6 million in operating cash flow for FY24. So a significant increase and a sign and confirmation that our existing ATM fleet is a cash generating asset and is now spitting off significant cash for further investments and debt repayments. We have a 23.6 million EBITDA target for FY24, which is a significant year-on-year increase of approximately 40%. And we had revenue forecasts of $67.2 million. As previously mentioned as well, we have a fantastic management team on the ground, which is complemented well by the Australian executive or Australian board, who coordinate and communicate regularly with the executive team. And the Findi board will be in India in 2 weeks' time for sign-off on further strategic initiatives over the next 12 and 18 months. We are also in the process of expanding into white label ATM market. We have lodged our white label ATM, and we expect a decision on that application process to be in this calendar year. When we cannot say, but definitely this calendar year. Well, that's everything that I have on the presentation at the moment. There are some appendices in this presentation that's available on the ASX website. So I do encourage all investors or anyone interested in the Findi story to download that and go through some of those appendices slides. And if there are any questions, please always come through. But now I'll throw the floor open to Q&A.
Thank you. The first question's from Chris Steptoe, and it's, what are your CapEx expectations for FY24? Is this mostly related to CBI?
So CBI CapEx is completely funded. You would see from the financial accounts that were released some weeks ago, that there was an increase in debt on our balance sheet. That was the complete funding of the CBI rollout from debt instruments, which the banks were very happy to do because we have guaranteed minimum revenues with that contract. But the only additional CapEx expenditure will be if we are awarded new contracts or existing contracts are upgraded, i.e. the additional 600 plus ATMs that we have the option with CBI. If we had that, we would need capital expenditure of those. And it's about $12,500 for a complete new deployment site ATM. So that's the machine, the fit out, the location, the backup batteries, the satellite link for communications, whole kit and caboodle. It's about $12,500 per ATM site.
Thanks, Nick. Our next question is, can you comment on the possibility of an IPO in India?
IPO in India. What I can point to is if you look at comparable companies like CMS, which is Cash Management Solutions in India, they trade on about 10 to 12 times EBITDA. And the natural home for this business one day will be for a Mumbai listing. And if you look at those comparable multiples, that's what the aspirations we would be on achieving that, which would enable all shareholders in Australia to get a significant uplift from the current value. So I see us currently as being very undervalued at 1 times EBITDA. When you look at cash generation on this business in Australian metrics alone, let alone when you look at Indian peers.
Thank you. The next question is from John Carter. And who owns the ATMs you roll out for CBI, SBI or Findi? And if a bank didn't renew the contract, what would happen to the ATM?
Cool. Fantastic question there, John. So all of the ATMs for CBI and SBI are owned by Findi. So it's our CapEx. We've deployed it. We own the location. So the only exception is if that ATM is deployed inside a bank branch, then obviously the bank owns the location, but it is our machine. And of the, for instance, SBI contract, about 900 of the 3,900 ATMs are in branch, and 3,000 of them are at our location. So it's our site, our location, our machine. It's just branded SBI. If for whatever reason a bank did not renew that contract, it is our ATM, our location. All we would simply do is change the horning from an SBI branding to a Findi ATM branding, and we would be able to continue that ATM in that location. We do not expect that to be the case, but that is the optionality the white label ATM license gives us, and the fact that we own those machines ourselves. So every ATM that we deploy and manage for ourselves, where we do everything, we own.
Thank you. The next question is, given you have come from a low base on net profit, is there any soft targets for beyond FY25?
I don't quite understand by soft targets beyond FY25. We're just giving guidance for FY24. And I'd consider it, it's not necessarily a low base for net profit. It's it's a strong base from where we've come from, and people should be focusing on the cash generation now of this asset as it continues to pay down significantly our gross debt position, as well as providing significant growth capital for new contracts and new, as I previously said, consolidation opportunities that there are in a highly fragmented market. So we're looking at both organic, i.e. new contract wins, and inorganic ways to grow revenue and therefore bottom line to give greater scale and to make us a larger and larger number one player in the market. There are lots of low-hanging fruit for consolidation. And to answer the second element of this question, the strike price for the options that expire in Jan 24 is 90 cents, and that's clearly outlined in the presentation. Do you have any insight as to why there is such a mismatch between the company's performance and its price? That's an interesting question. We look at it in two ways. The current board and executive team have really only had this business for 12 months in its current form. We were originally called something else. We rebranded in September of last year. We now have 1 full year of earnings that are fully audited that we've released to the market. We now have forecast guidance. Now that all these things have been put in place and we've got the rebranding completed, we're now investing in IR. And we've appointed just recently on the back of this announced presentation, additional IR support to help with us over the coming 3, 6 and 12 months. I can also openly say we have the Indian management team coming to Australia in July, late July, to do a roadshow amongst existing shareholders, investor forums, and brokers across East and West Coast to get the Findi story further out. Now that we are in a position to very proudly state last year's earnings and what our guidance will be, and hopefully some good aspirational strategic initiatives to come to light over the coming months. And there'll be a further update to the market on our strategic opportunities within the next quarter.
Thank you. That's the end of the Q&A segment. So I'll pass back to you for final comments.
No problem. Thank you very much. I'd just like to thank all the shareholders for their continued support of Findi, myself and the board and the Indian executive team. We're very proud of the result we've just put forward, and we're extremely we're excited about what we will be delivering over the next 12 months, and most importantly, what new inorganic opportunities are currently in front of us, as well as what organic opportunities are also in front of us. So we see 2 great avenues for us to deliver continued consolidation in the industry and position Findi as the absolute market leader in payments in India. And if you would like exposure to a highly dynamic and growing market, being the financial payments and inclusionary banking sector in India over the next 3 to 5 years, buy Findi. It's your only Australian exposure for that part of the Indian market. Thank you, everyone.